If you're still chasing AI stocks that have already gone up several 100%, then you need to pay very close attention to today's video. Because I believe Wall Street capital may now be quietly rotating into the next phase of the AI trade, and this time they're not only focusing on Nvidia. They're focusing on a software company that many retail investors have barely even heard of, ServiceNow. Recently, Jensen Huang said something on CNBC that I think the market is massively underestimating. He said, "The biggest opportunity in AI is not software itself. It's the softwareization of the entire service industry." And according to Jensen, that market could eventually become 100 times larger than the traditional software market. But here's the important part. When Jensen Huang was talking about this opportunity, he was basically pointing directly at one company, ServiceNow. At the same time, Bill McDermott publicly stated that he believes the company has a path toward a $1 trillion market cap. Now think about that for a second. Today, ServiceNow's market cap is only around $100 billion. Which means, if this thesis is correct, the stock could theoretically still have close to 10 times upside over the long term. So today I want to break down several important questions. Why is Wall Street suddenly paying so much attention to ServiceNow? Why could software companies become more important than many AI hardware companies during the next stage of the AI cycle? And most importantly, does ServiceNow actually have the potential to become one of the biggest winners of the next AI capital cycle? Because right now, whenever people think about AI, most investors still immediately think about GPUs, semiconductors, compute power, Nvidia. But I believe the market is starting to overlook something extremely important. Once AI becomes fully integrated into the enterprise, who is going to manage all these AI agents? Who is going to control them? Who is going to integrate AI into existing enterprise systems? And that is exactly what ServiceNow is positioning itself to become. A lot of retail investors don't even fully understand what ServiceNow actually does. But behind the scenes, many of the world's largest corporations already run critical operations through ServiceNow, including IT systems, employee onboarding, customer service, security alerts, financial approvals. In many ways, ServiceNow is essentially the operating system inside large enterprises, and that's exactly why the company is suddenly becoming so important in the AI era. Because over the past few years, Wall Street believed AI would eventually replace traditional software companies. That's one of the reasons software stocks massively underperformed for a long period of time. But now investors are starting to realize something. AI does not replace enterprise systems. AI gets built on top of them. Because the most valuable things inside a corporation are not chatbots. It's workflows, data, permissions, security systems, enterprise infrastructure. And ServiceNow already owns all of that. So what the company is really doing now is layering AI agents on top of existing enterprise systems. And that is exactly what Jensen Huang meant when he said, "Service is becoming software." Because in the future, more and more enterprise jobs could eventually be handled by AI agents. Customer support, HR/IT operations, financial review, enterprise automation. And where will many of these AI agents ultimately operate? In many cases, the answer may be ServiceNow. And that's exactly why Wall Street is beginning to reprice the stock. But perhaps the most important thing investors are missing is this. AI monetization is already happening. A lot of people still claim AI is mostly hype with no real profits, but ServiceNow is already generating meaningful AI revenue today. According to the company's latest earnings report, subscription revenue grew 22% year over year, free cash flow margins reached 44%, and perhaps most importantly, the number of customers spending over $1 million annually on their AI product, Now Assist, increased 130% year over year. And that tells us something extremely important. Enterprise AI adoption is already accelerating. And honestly, enterprise AI may ultimately become the biggest AI market of all. Consumer AI gets the attention, but enterprise AI is where the real money gets made. At the same time, ServiceNow has also been aggressively expanding its AI ecosystem, acquiring AI companies, building AI security infrastructure, and partnering with OpenAI, Microsoft, Amazon Web Services, Anthropic, and Nvidia. Because now the entire industry is starting to focus on one major problem. Once thousands of AI agents begin operating inside corporations, who controls them? Who manages permissions? Who prevents data leaks and compliance disasters? And ServiceNow is trying to become that AI control layer. That's why institutional money has recently started rotating back into software stocks. Because the market is beginning to realize the next major AI opportunity may not simply be chasing more GPUs. It may be AI software infrastructure. Now, obviously, we also need to stay realistic about the risks. Market sentiment around AI is already extremely elevated, and ServiceNow has already had a strong move higher. So this is definitely not one of those buy it and never worry again situations. But personally, I believe if AI agents truly become integrated into enterprise systems at scale, then ServiceNow could eventually become one of the most important software platforms of the AI era. And I think Wall Street may only be starting to understand that now. So at this stage, I'm focused on this question. Which companies will become the core infrastructure of the AI economy over the next 5 years? Remember this, Wall Street chases headlines, but smart money positions around infrastructure. I'm Kevin. If you like my content, please give me a like and follow, and leave your comments below the video. Thank you for your support.